Thanks for learning more about quality of life insurance. Truly life insurance you don't have to die to use. Quality of life insurance is special because of the accelerated benefit rider, which can provide you with money to help meet important needs if you experience a qualifying illness or condition. This is definitely a valuable benefit of quality of life insurance, but at its core, quality of life insurance is about protecting your loved ones in the event of your death. AGLA Choice Guarantee Plus, one of the universal life products in the Quality of Life Insurance suite, offers a life insurance death benefit that is guaranteed to policy maturity. Families who are just starting out may choose to purchase a combination of universal life and term coverage. Term insurance is basic and helps meet basic needs. For instance, people frequently purchase term insurance to cover a mortgage or to help pay their children's college tuition in the event of a premature death. As people get older, they may no longer have a need for temporary coverage. Many older adults in their 50s or 60s and beyond have often paid off their debts, and their children are through college and are supporting themselves. As people continue to live longer, the need for life insurance to help protect their loved ones from inflation, longevity risk, and market risk after their death remains. AGLA Choice Guarantee Plus is designed to help meet your ongoing permanent financial security needs. It offers guaranteed life insurance protection at an affordable premium, so you can still protect your family's lifestyle, but in a cost-effective way. Here's a hypothetical example of how AGLA Choice Guarantee Plus can work. Daniel and Terry are in their 50s and have entered a new stage in their lives. Their children, Doug and Heather, are grown and are starting families of their own. They've done well financially and lead a very active and healthy lifestyle. Daniel and Terry are looking forward to retirement, yet they're both concerned about having an ongoing income stream to live comfortably throughout their senior years. Their concern is a valid one. Americans are living longer than ever before. Average life expectancy is now 78.5 years, and it's been on the rise for the past decade. And doctors say that not only is lifespan increasing, but more importantly, the active lifespan is increasing as well. People aren't just living longer, they're living better. Daniel and Terry are living proof of this and enjoy a healthy, active lifestyle. Daniel and Terry have 401k plans through their employers, but due to market fluctuations, their values aren't as high as they would have hoped. They also know that any major medical event could potentially disrupt their retirement plans. They meet with their AGLA agent to go over their existing insurance policies and to think about what kind of insurance they need for the future. They have a combination of term and universal life coverage. Their term policies are expiring soon, and Daniel and Terry know their existing universal life policies alone won't be sufficient to meet their ongoing life insurance needs. Their agent explains that AGLA offers several universal life products that can meet various needs at different stages in their life. Now, generally, universal life products offer flexible premiums and flexibility in how the policies can be used. If there isn't enough cash surrender value in the policy to cover the cost of maintaining it, it's possible that coverage will lapse. Their agent reminds them that adequately funding a universal life policy is ultimately the responsibility of the policy owner. Daniel and Terry are impressed with the guaranteed life insurance benefit that AGLA Choice Guarantee Plus can provide. The innovative living benefits protection against qualifying critical, chronic, or terminal illnesses offered through the accelerated benefit rider is also very appealing. AGLA Choice Guarantee Plus helps eliminate uncertainty so that Daniel and Terry can be sure their coverage can be there when they need it most. After they work with their agent to complete a thorough needs analysis, Daniel and Terry each purchase a $250,000 policy. They also both choose to purchase the optional defined accelerated benefit at the level of 10% of their policy, or $25,000. Now, a few years later, Daniel suffers a debilitating stroke that leaves him unable to perform 2 of the 6 activities of daily living, as described in his policy. Daniel and Terry need money to help pay medical bills and expenses. Faced with immediate financial needs, Daniel chooses to receive the defined benefit under his accelerated benefit rider and receives $25,000, which is 10% of his applicable life insurance coverage. This is the amount Daniel chose when he purchased the policy. In addition to the defined benefit, Daniel also chooses to exercise the flexible accelerated benefit provided by his policy. There is no additional cost for this benefit because it's based on how your qualifying condition affects your life expectancy. Daniel accelerates an additional $50,000 of his life insurance coverage and accepts the company's offer of $15,000, giving him a total in accelerated benefits of $40,000. Remember, acceleration means that Daniel elects to receive a portion of his life insurance benefit now, before his death, which reduces his life insurance coverage and policy values. Of course, Daniel's remaining $175,000 life insurance coverage is still in place and is guaranteed. These cash benefits help Daniel and Terry endure the emotional, physical, and financial aspects of his illness. Daniel survives due in part to the personal care and attention he's able to receive thanks to his accelerated benefits. And the couple didn't have to tap into any of their existing retirement funds to help cover the cost of Daniel's illness. Terry retires some years later, and she and Daniel are able to enjoy several years together before Daniel eventually passes away. Terry receives $175,000 as a guaranteed life insurance benefit, which gives her the time and freedom to decide to sell the family home or move closer to her grandchildren. Terry remains a very active senior. She's able to travel and spend time with her family, all due to her and Daniel's planning for this stage of life. When Terry dies, her children, Doug and Heather, each receive $125,000 from Terry's AGLA Choice Guarantee Plus policy. After they settle their mother's estate and take care of her final expenses, they each have money left over they can use to help put their children, Terry and Daniel's grandchildren, through college. Purchasing their AGLA Choice Guarantee Plus policies allowed Daniel and Terry to do exactly what they set out to do: take care of each other and protect their growing family's financial security through the later stages of their lives. By planning properly, Daniel and Terry had peace of mind, knowing the big contingencies would be taken care of. They were confident they could do the things they wanted to do without financial worry. They had dignity in their later years, not to be a burden to their children. And finally, they were able to leave a legacy to their children and grandchildren. Think about your family and how their quality of life could be impacted if you suffered a serious illness or if you were to die prematurely. Now think about how their lives could be improved with your decision to purchase life insurance you don't have to die to use. This innovative and affordable coverage can be extremely helpful to you and your family if you should suffer a qualifying event and need to access your life insurance benefits while you're still living. And remember, with AGLA Choice Guarantee Plus, if you pay the required premiums in a timely manner, and if you've been healthy and haven't needed to use your accelerated benefit rider, your family will receive your entire life insurance benefit, guaranteed. So either way, purchasing an AGLA Choice Guarantee Plus insurance policy makes sense. Take a look at how this innovative and affordable insurance solution can work for you and your family today, while you're probably in good health and can qualify for this important coverage. Remember, it's your money, your insurance, your choice.